to FTUK's Non Farm Payroll live stream for the March data out of the Bureau of Labour Statistics. 2025 is the 4th of April today. What a week. How are you doing? Have you managed to survive it? Goodness me. Liberation Day. I don't know, maybe that should have been Liberation... maybe that should have been Volatility Day or even Volatility Week. Definitely... markets have been moving, and I know for a fact that there's a lot of very happy traders at FTUK this week. Some big payouts that have been going out, and it's good to see. We are slaves to volatility, and there is volatility around. So I hope you've had a good week wherever you are, but do not worry if you've made a bit of a mess of it, because there's lots and lots and lots of other stuff to get your teeth into. We've got inflation data next week, which is obviously going to move the markets. But before we can get towards that, we've got, of course, the jobs data out of the Bureau of Labour Statistics, just hitting the wires in 14 minutes time. So we better jump straight in. We've got, for today, we're looking for 135,000 new jobs to be created out of the United States for the month of March. That's down from the previous 155. And unemployment rate, that's expected to stay flat. It's not been budging at all. 4.1% from the consensus, and also 4.1 from the previous reading in February. There's no change expected there. I suspect as we get more pressure on the system now, that we should be getting some sort of movement in the unemployment rate. It feels like it, but not as yet. Market is not looking for it. Average hourly earnings, that is starting to twitch a little bit. We're expecting a slightly lower number on the year-on-year rate, 3.9% from the previous 4%, and all flat on the month-on-month reading for March, 0.3%. Now, let's just quickly look at the JOLTS numbers, because this is jobs week, not just non-farm payroll day, because JOLTS came in lower than most people were expecting, 7.568 for the February reading. That is down from 7.762 million. And look at those job quits. That is the interesting bit. Lower on the job quits as well, 3.195 million versus the previous 3.256 million. So you've got to ask yourself, that's really where it gets quite interesting. Like, why is that? Is that because people aren't moving because the wages are not as good? Or maybe the jobs that people are looking for, the quality of jobs is not there. Or maybe they just don't feel quite as confident. And, so that tells us a lot about how people are feeling and why aren't they moving, You want that turnover in the jobs market for sure. Yeah. ADP, of course, that was also on Wednesday as well. This is kind of like, there's always something that makes a mess of it. You always want it nice and clean and simple to understand. But no, we did have a higher reading on the ADP employment change for March, 155,000 from the previous 84,000. But of course, remember that ADP is a private sector employment metric. And it's only 1/5 of the private sector, but nevertheless, it is meaningful. We have to pay attention. So it just makes it a little bit more muddy. But given what has happened this week with the liberation stuff and all the tariffs and stuff, I'm hoping that today it's going to be relatively straightforward to work out. But we'll definitely sort of dissect it. But one thing to say is that we have got a fantastic giveaway. If you want to win an account in the stream today, you still can. We've had a great week with one of our partners, FX Replay, backtesting manufacturer. You must have seen it on the website or on the emails. And we've got a great giveaway, the best non-farm payroll we have ever done. You still have time, just over 11 minutes to enter. All you need to do is click on the link in the description section of this video, go down and fill in the form, fill in all your details of what you think the actual jobs number is going to be, and then you'll be in the prize draw, and you could potentially win amazing prizes. A 5K instant funding account. That's instant funding, $5,000 that you can start trading on Monday. That's together with an FX Replay Pro subscription for 3 months. Full backtesting software and an account to trade. That's amazing, really amazing for first prize. Second prize is a 10K one-step program with an FX Replay Pro 3-month subscription as well. And then finally, 25K on the two-step. If you want a 25K two-step. Some of those two-step guys, they are ultra serious traders, man. They really, really are. FX Replay is thrown in with that as well. So this is, no question, this is the best giveaway that we've ever done. So it's worth doing. You still have time, 10 minutes to go. So just click on the link in the description. inflation, and then away you go. Right, okay, let's move on. Let's talk about non-farm payrolls. I thought we'd do a primer today. We talk about non-farm payrolls every single month. We've got 10 minutes, but I always forget, people are joining all the time and they've never seen it. And if you've never seen non-farm payrolls before, people are scratching their heads thinking, what on earth is all this? It's so confusing. So I thought we'd do a very, very gentle sweep round of just explaining what non-farm payroll is, why it's important, how the markets move, and what are the themes that are driving the market at the moment. It's very, very important to do. It is a government statistic that is printed on the first Friday of every single month. Now, that's a rule, but there's always exceptions, of course. If the Friday is like the first of the month, sometimes they shift it to the week later. But generally, it is the first Friday of every month. And it includes all of the United States workforce, except people in the farming industry, private households, non-for-profit organizations, people that are active in the military, and also self-employed as well. But everybody else, they get included in this statistic. And it comes from the Bureau of Labor Statistics. That's the website. I stick it on the slides every single month. www.bls.gov. If you want to spend your weekend looking at it, then you should do it. It's a little bit dry, but hey ho, this is the stuff that moves markets. This is the stuff that traders are interested in, and you should be interested in it too, for sure. Now, 80% of the workforce, the US workforce, that are contributing to this statistic, they are having an impact on GDP. And GDP growth as a sentiment is just the poster boy of the moment. It's not really about interest rates at the moment or inflation. It's all about growth because of the tariffs. So this is a very, very important non-farm payrolls to get your head around. Now, it gives us a deeper understanding of GDP and helps us understand essentially the overall health of the economy. What markets tend to do when the data gets released is they tend to, you get the volatility, the chart, but markets obviously want to price things in advance. So any big changes, they get moved forward into the next week, and you'll see those moves start to map out into the price action, which is why you've got to be paying attention. So even if you don't trade it, and do not gamble into non-farm payrolls, that's what we always say every single week. Even if you're not trading it, you should still be watching. You have to watch. Because if you're not watching, then you're missing out on some fantastic education. The value is incredible, and you start to build up that memory as a trader. It's very important to do, even if you're not actually trading it. Now, how do we think about this? Well, essentially, it's not complicated. You're either creating more jobs or less jobs. If you're creating a lot of jobs, then what you're doing is you're essentially supporting your economy. You're supporting growth in the system, and that is generally seen to be positive for risk assets. That's things like the stock market. In theory, you're creating more jobs, companies are growing, and it boosts the valuations. Obviously, that juices the stock market. It makes logical sense. Now, what that also does as well, because people have more jobs and there's more money that people are using to spend in the economy, that puts an upward pressure, bit of pressure on inflation. And that in itself is what we would consider to be hawkish, which is why when we connect interest rates to this, we would say, okay, if you want to tackle that rising inflation, you would do that by increasing interest rates, making it harder for people to borrow so they're not spending as much. So the interest rates are really the lever that controls the system. That's it. Very, very simple. Not difficult to work out. On the opposite side of that, if you are not creating as many jobs, if the jobs are lower, you are obviously not helping your economy. But more important, in terms of thinking about it from markets, it's not just whether you have created less jobs, but if you're not creating the conditions to create jobs. So you get what I mean? This is markets all the time, particularly when it comes to understanding central banking policy. It's not just the number itself. You've got to ask yourself, is the system doing what's needed to create jobs? Well, actually, the tariffs are not pro-job. Well, I suppose they will say eventually down the road, but in its single point of isolation, they are not. They are detrimental to growth. So therefore, it's more complicated than just saying whether the number is lower or not, particularly of the backdrop of Donald Trump's new tariff and this whole Liberation Day thing, which we will touch on in a second. That would be seen to be negative for interest for risk assets. That would be why you would start to see the S&P 500 and the stock markets start to come under pressure. It would be less inflationary, and therefore you would see it as dovish. So your interest rate lever would be used to basically put more money into the system, make things a bit cheaper, give people a bit more money. There's not much interest on their credit cards, however you want to think about it, and that would stimulate growth into the economy. That's basically how it works. Now, what you got to remember with all of the jobs data, because people say, yeah, but you said A equals B, so why did D happen and not C? Well, you always get the structure of how it should play out, but markets, they do tend to focus on different things, and you've got to understand it in the bigger picture. So what you've always got to do is think about this wrapped around a fundamental theme, and that theme shifts in time. And currently, we've been in an absolutely ginormous week. This week has been massive for markets. Look at the price action. Look at some of the moves in the dollar, in some of the safe haven assets, in gold. All of these markets have really, really been moving in a very volatile way, and that's because our theme at the moment is all about Trump and the tariffs and how that is going to, the protectionist sort of like way that he's running the economy in the United States. I'm sure for all of the reasons that they believe to be valid, but the spillover effect in that, the markets twitch and the markets react accordingly. So that has generally been seen once you look at it in context with everything else. It has been interpreted as being relatively negative for risk assets. That's why we're seeing the stock markets under pressure. That's your growth, yeah? So it's negative. So the tariffs are negative for growth at the moment. And then also the opposite side of that, they're seen positive for demand, but positive for demand in a very, very specific way. And that is in the commodity markets, particularly in the metals markets. So this is why, if you look at a price of, let's just bring up my chart of gold. You can see it here. If you look at the price of gold now at the moment, you can see it there. I mean, that's the move that we've been on. This is markets wanting to price stuff in ahead of time. This is anticipation of those tariffs, and this is where the tariffs are right at the top. Look at the chop at the top. I mean, it looks like it's starting to form a top now on the gold market. You know, or certainly if you're bullish and you had a fantastic start to the year, you may be thinking about taking something off the table. You know, that's how it works. But basically, this has all come off the back of demand for gold. Where's that coming from? Because as the market was anticipating tariffs, what it was doing is there's a huge amount of physical movement of gold across the Atlantic from Europe and from London into New York to get ahead, to get the sales in, to get the good deals before the tariffs get put in place. That's what that demand and that pricing structure on the chart, that's where it's coming from. So you see what I mean? So we've got something that's negative on the one hand for risk and growth, but then also you've got this demand component in the commodity market. It's a really fascinating landscape. What I like about this kind of market at the moment is the volatility, because you get opportunities, and this is why we've had a lot of traders that have done really well this week. And it's because though that volatility is there if you know your strategy and you know exactly what you're doing. So we've just got a couple of minutes to go, but I just want to mention before, because I need to just keep my eye on the clock because I could just talk and talk. I just want to mention that my focus for this week is because of the impact, the way that the Liberation Day was seen, very, very negative for Asia. So I instantly think dollar yen. I instantly want to see the push into the safe haven and also the impact on a currency from that area in the world. So we've obviously got dollar weakness, and this here you can see, this is the dollar yen on a daily chart. Now you wanted to talk about in my analysis, and we actually got a bit too quick actually. We actually tagged this area which I thought was a really key inflection point, 144.72. We've tagged it already in the session, so it's going to be interesting to see how that goes. Now this area here is a massive line of commercial hedging. That's professional money saying that they've seen enough. It's an extreme point. They've seen enough in dollar weakness from here. So I'm thinking now that the bottom of that area, that 146.54, that should act as a really good line in the sand. If this market, if we are going to get some dollar strength into quarter two, now's the time. Now really is the time. If it's not, and we're going to stay under here, there's possibly going to be a weaker dollar into the next couple of months. It's really, really important. Okay, so we've got a minute and 25 to go. So what I'll do, okay, let me just start to get my ducks in a row. So I really want to focus on this this dollar yen. I mean, I'm a long-term trader, and you know, people that have seen my trading style before, commercial hedging, it's all about following the professional money. So commercial hedgers, where they are making moves in the market, I want to see where they are, and we are right in this spot now here on dollar yen. The dollar is such a fantastic currency to trade. It's the biggest, it's the big daddy out of all of them. So if you're an FX trader, you must have a view of the dollar. You must have a view. Now, I think we're a little bit overdone. I do think we're a little bit overdone. So I'm looking at this price action here. If we get a weaker jobs number, you would, in theory, be expecting more down pressure on the dollar, which would be dollar yen going down. If it's a high number, though, we'd expect a bit of a lift up. Yeah, that's what I'm going to the way that I'm thinking about it at the moment. But we're nearly there. We've got 20 seconds to go now. So, okay, here we go. We're looking for 135. Let's see how the dollar reacts now. That's going to tell us a lot for next week. $228,000. Wow, that should be dollar supportive, and you can see it there. Look, oh, is it going to stick? Wow, that's a high number. 4.2. Unemployment's ticked up as well. Mixed bag. Interesting. Now now we should be dollar supportive here in theory. Let's see how it plays out, which gives us this whole texture. Exactly what I put in my analysis for this weekend is thinking about how the dollar could potentially bottom, and then people are looking for more downward pressure on it. They join in, and all of a sudden in 3 weeks' time, we're printing 150 on the dollar yen. I mean, I'm not saying it's going to happen, but you see the logic of it, yeah? So this is where you can see all of those markets wants to price all of that in way ahead of time. That is a high number, that. Well over 200. Okay, good to see. Let's have a look how the S&P 500 reacted. We should be supportive in the price action on the S&P 500. Yeah, it is a bit chopped, but you can see it there. Let's go down to a 5 minute. Yeah, you can see it there. You'd want to be holding these areas down here now. If you're an intraday trader, just get these swing lows in here. And you'd be looking for, as we open into the US session now, you'd be looking for these structural points to hold. Because if you're going to go up, the market should be supported. If you come down to test support or old resistance, you shouldn't bleed out the other side. That's the way it works. That's the easiest way to think about it. So yeah, it does feel at the moment that the fundamentals are connecting well. A high number, supportive. So that ADP print, when we talked about the ADP before, yeah, there was something in that. It could be also as well that the jolts was from February, not March. So maybe a little bit too much of a lag. Interesting to see. Interesting market. So yeah, it's fascinating times. Now, obviously, we're going to have inflation next week. So this is where the market will take this, absorb it, and carry it forward into next week to see how things go. Hey, you can see the S&P 500 now. I'm just curious to know if we've got a bit of a downtick in gold as well. Let's just keep a track on that. Yeah, we just got that. Yeah, you see there. Now, this is where you can tune in with how markets really feel, because this is gold priced in dollars, obviously, yeah? So when we're saying, okay, well, the dollar is supported, we should see some pressure on this gold price. This is a 5 minute chart. You can see it now. It's just holding. Now, if we then, get into this session here, let's look at our intraday low point here already on gold. We've got a nice, oh, hang on. Let me just get my line on here. There we go. Got a nice line to work with there. That swing low point, intraday low point there at 3,078.36. I'd want to see if this is going to stick. You want to see that US session open. You want to see any sort of movement to the upside to be sold, to be offered relatively quickly, and then push back down to the downside in short order. Closing the week below the intraday swing low like that on a non-farm payroll is a very, very strong bearish sign. Let's see how things go. Let's see how it all works. So yeah, good stuff. Brilliant. Okay, well, Rez has been working very hard in the background to come up with the numbers. Let's see who's actually won the competition. This is the best non-farms we've ever done. Absolutely amazing. Let me just go over to the chart now. We've got some guys on here. Let's just move that over there. You see, okay. So the winners of our FX replay themed week non-farm payroll giveaway. It just rolls off your tongue, doesn't it? Yeah. Winner of the 5K instant funding account with that FX replay is, I've not got the full details here, but it's Raj. These are all email addresses. So Raj, congratulations to you, sir. That's fantastic to see that you've won the 5K account. The 10K one step, that's gone to Lydia. Congratulations to you. Well done. That's a fantastic prize. That is a 1K 10 step with the back testing 3-month subscription as well. And then the 2-step, the 25K 2-step, D-Bring Gaming. Debra Gaming. I hope you are happy with that price. It's a fantastic price. You will all receive your accounts details today, or it'll be over the weekend, first thing Monday, something like that. And you'll be able to then trade those accounts from next week. And you'll be able to log into FX Replay. They will give you the free subscription, and away you go. They called it right. They got the high number. Yeah, okay. I actually thought we were going to get quite a weak number. But yeah, there we go. That's markets for you. Okay, good stuff. Yes, okay, so finally, before we sign off for yet another week, just to mention a big thank you to the guys at FX Replay who very, very kindly sponsored the week here at FTUK. I know a lot of people have found it very, very popular, very, very helpful, absorbing some of the content, and yeah, they've got a massive 30% discount off FX Replay, their products, and also a 30% discount off the accounts here at FTUK. So it's been a great partnership. Thank you very much to the guys at FX Replay. Well, obviously, I hope we're going to partner with them later in the year as well. So it's good to see these kind of things. They do get some traction, and it's helpful to everybody. So it's good to see. You can still get the offer that we've had all week. That's still going to be on the website for the rest of the weekend. Everything is changing next week. We've got a very, very big week, and news which I will let you know very, very early next week as well on the socials and stuff. But this offer is going to be here all weekend. A 30% discount off your account, and also you get a 30% discount off FX Replay as well. We've got a landing page. All you need to do is go over to, let me see if I can just get all this right working. Yeah, all you need to do is go over to www.ftuk.com/FXReplay, another mouthful, and you'll see the landing page here, all the details of what you get, how to get it, how it all works. It's all on here for you. So give that a go and see how you get on. Right. Fantastic. We live in interesting times. Very, very, very interesting times. It's good to see that the markets are very active. It really is what you live for as a trader. You live for that volatility. And if you haven't really made a good job of it this week, do not worry, because those dynamics, they change, and the market never ever stops spitting out opportunities. There is more to come next week. Thank you very much for joining us for Non Farm Payrolls, and a big thank you to FX Replay. Have a fantastic weekend, and we will see you all next week.